Now I come to the other, which is the financial sector. If governance was described as one of the pair of the hands holding the bouquet consisting of aspirational India, economic development and caring India, the other is the financial sector. A clean, reliable, robust financial sector is critical to the economy. A clean, reliable and robust financial sector is critical to the economy. In our efforts to achieve the US $5 trillion economy, the financial architecture should evolve. The financial architecture should keep evolving and move from strength to strength. We had earlier approved consolidation of 10 banks into 4. In the last few years, the Government of India has infused about 3,50,000 crores by way of capital into public sector banks for both regulatory and growth purposes. Governance reforms would be carried out in these banks so that they become more competitive. A few among them will be encouraged to approach capital market to raise additional capital. Sir, I wish to inform this august House that robust mechanism is in place to monitor the health of all scheduled commercial banks and that depositors' money is absolutely safe. I wish to underline this point, sir, that this August House should know that robust mechanism is in place to monitor the health of all scheduled commercial banks and that depositors' money is absolutely safe. Further, the Deposit Insurance and Credit Guarantee Corporation has been permitted to increase deposit insurance coverage for a depositor, which is now standing at 1 lakh of rupees to 5 lakh per depositor. Sir, the insurance cover for a depositor is at 1 lakh now. Now we are raising it to 5 lakh for each depositor. Sir, to strengthen the cooperative banks, amendments to the Banking Regulation Act are proposed for increasing professionalism, enabling access to capital, and improving governance and oversight for sound banking through the RBI. The limit for NBFCs to be eligible for debt recovery under the Securitization and Reconstruction of Financial Assets and Enforcement of Security Interests under the SARFAESI Act 2002 is proposed to be reduced from 500 crores to asset size 100 crores only, or loan size from existing 1 crore to 50 lakhs. Therefore, we feel many of the small NBFCs which can come for debt recovery would be far easily done for smaller companies. In the last few years, the government has taken concrete steps to bring our banking system to be robust. However, there is a need for greater private capital. Accordingly, it is proposed to sell the balance holding of Government of India's IDBI Bank to private, retail and institutional investors through the stock exchange. There is a need, sir, to take further steps to bring in transparency and greater professionalism in public sector banks. The government will take appropriate measures towards this end. So to help easy mobility while in jobs, we wish to infuse into the universal pension coverage with auto-enrolment. Also, we wish to place such mechanisms which can enable interoperability and provide safeguards for the accumulated corpus. Regulating role of PFRDAI, which is the pension regulatory body, requires strengthening. Necessary amendments would be carried out in Pension Fund Regulatory Development Authority of India Act that will also facilitate separation of NPS trust for government employees from the PFRDAI. This would also enable establishment of a pension trust by the employees other than from the government. I am confident that this will motivate citizens to plan for their old age. So this section, which I will now speak, will relate to the MSMEs. MSMEs are vital to keep the wheels of our economy moving. They also create jobs, innovate, and also risk takers, and they are risk takers. Several measures for the MSMEs have been taken in the past few years. There are more steps proposed in this budget also. I propose to make necessary amendments to the Factor Regulation Act 2011. This will enable NBFCs to extend invoice financing to the MSMEs through TREDS, thereby enhancing the economic and financial sustainability. Working capital credit remains a major issue for the MSMEs. It is proposed to introduce a scheme to provide subordinate debt for entrepreneurs of MSMEs. This subordinate debt to be provided by banks would count as quasi-equity and would be fully guaranteed through the Credit Guarantee Trust for medium and small entrepreneurs. The corpus of the CGT MSC would accordingly be augmented by the government. More than 5 lakh MSMEs have benefited from restructuring of debt permitted by RBI in the last year. The restructuring window was to end on 31st March 2020. Government has asked RBI to consider extending this window till 31st March 2021, one more year, so that whoever wants, they can go and approach. An app-based invoice financing loans product will be launched. This will obviate the problem of delayed payments and consequential cash flow mismatches for the MSME. Many mid-sized companies are successful domestically, but not in export markets. For selected sectors such as pharmaceuticals, auto components, and others, we propose to extend hand-holding support for technology upgradations, R&D, business strategy planning, and so on. A scheme of 1,000 crore rupees will be anchored in the Exim Bank together with the SIDBI. Both these institutions would contribute 50 crores each. This 100 crore would be achieved towards equity and technical assistance. Debt funding of 900 crores from banks would be made available. Sir, financial markets. I would like to give a few of the major steps and initiatives being taken by the government for the financial markets. Last year in my budget speech, sir, I had mentioned about deepening the bond markets. To achieve the aspirational growth rate, we would require flow of capital in our financial system. A lot of work has been done on this in consultation with the RBI. Honorable Speaker, sir, I am pleased to inform this House of the developments. Certain specified categories of government securities would be opened fully for non-resident investors, apart from being available to domestic investors also. The limit for FPI in corporate bonds, currently at 9% of outstanding stocks, will be increased to 15% of the outstanding stock of corporate bonds. To improve investors' confidence and to expand the scope of credit default swaps, we propose to formulate a legislation to be placed soon before this House for laying down a mechanism for netting of financial contracts. The debt-based exchange-traded fund, the ETF, recently floated by the government was a big success. Government proposes to expand this by floating a new debt ETF consisting primarily of government securities. This will give retail investors access to government securities as much as giving an attractive investment for pension funds and long-term investors. So to address the liquidity constraints of the NBFCs and the HFCs, this was very much talked about between July and December last year, sir, 2019. liquidity constraints was very frequently mentioned to us. So to address liquidity constraints of the NBFCs and the housing finance corporations, post the Union Budget 2019-20, the government formulated a partial credit guarantee scheme for the NBFCs. To further the support of providing liquidity, a mechanism would be devised. Government will offer support by guaranteeing securities that are so floated. Infrastructure financing. Government's commitment for investment in infrastructure was reiterated when 103 lakh crore national infrastructure pipeline projects were announced. I would also like to inform that about 22,000 crores of rupees has already been provided as support for infrastructure pipeline. On December 31st, if honourable members would recall, a national pipeline consisting of more than 6,500 projects were announced. 22,000 crore has already been provided as support to infrastructure pipeline. This would cater for equity support to infrastructure finance companies such as the IIFCL and a subsidiary which is of NIIF. So two institutions, IIFCL and the subsidiary of NIIF, take it. They would leverage it as permissible to create financing pipeline of more than 1 lakh crores. This would create a major source of long-term debt financing for infrastructure projects and fulfill a long-awaited requirement. So the IFSC, GIFT City, has the potential to become a center of international finance as well as a center for high-end data processing. GIFT IFSC has an approved free trade zone for housing vaults. It already has 19 insurance entities, 40 banking entities. It has also provided for setting up of precious metals, testing laboratories for them, and refining facilities also. With the approval of the regulator, GIFT City would now set up an international bullion exchange in GIFT City IFSC as an additional option for trade by global market participants. This will enable India to enhance its position worldwide, create jobs in India, and will lead to better price discovery of gold. Sir, in the recent years, there has been a surge in trading volumes of Indian rupee in the offshore financial centers. The government and the RBI has taken various measures to permit rupee derivatives to be traded in the International Financial Services Center at GIFT City, Gujarat. So just a very quick word on disinvestment. Listing of companies on stock exchanges brings discipline, and it disciplines the company and provides access to financial markets and unlocks its value. It also gives opportunity for retail investors to participate in the wealth so created. The government now proposes to sell a part of its holding in the LIC by way of initial public offer. Initial public offer. Sir, Fiscal Management. The 15th Finance Commission. The 15th Finance Commission has given its first report pertaining to financial year 2020-2021. In the spirit of cooperative federalism, I am pleased to announce that we have in substantial measure accepted the recommendations of the Commission. The Commission would submit its final report to the President during the latter part of the year for 5 years beginning 2021-22. It is decided to transfer to the GST Compensation Fund balances due out of the collection of the years 2016-17 and 17-18 in 2 installments. Hereinafter, transfers to the fund would be limited only to the collection by way of GST compensation cess. A fundamental overhaul of centrally sponsored schemes and central sector schemes is necessary so that we can align them with emerging social and economic needs of tomorrow and to ensure that scarce public resources are spent optimally. Recently, there has been a debate over transparency and credibility of the projected fiscal numbers. Let me assure the House that the procedure adopted is compliant with the FRBM Act. This is also consistent with the practices hitherto followed. However, for greater clarity, I have enumerated those central government debt that are not part of the market borrowing and are used to fund the expenditure at the annex. I'd like to repeat this line, sir. I'd like to repeat this line, sir. For greater clarity, I have enumerated those central government debts that are not part of market borrowing and are used to fund the expenditure at the annex. Servicing of interest and repayment of these debts, as hitherto done, are done out of Consolidated Fund of India. So now I come to some numbers. Revised estimates of expenditure for the financial year 2019-20 are at a level of 26.99 lakh crores, and the receipts are estimated at 19.32 lakh crores. We have estimated nominal growth of GDP for the year 2020-21 on the basis of trends available at 10%. Accordingly, we have estimated, sir, let me finish, sir. So we have estimated the nominal growth. We have estimated the nominal growth of GDP for year 2020-21 on the basis of trends available at 10%. Accordingly, receipts for the year 2020-21 are estimated at 22.46 lakh crores. And keeping in mind commitment of the government towards various schemes and the need for improvement of the quality of life, level of expenditure has been kept at 30.42 lakh crores. Sir, during the year, government has unfailingly worked towards keeping up capital expenditure. Actually, there is substantial enhancement. All the flagship schemes of the government have been fully provided for. Details may be seen in the annexes to the printed copy of my speech. Every budget must appropriately address the issue of fiscal deficit. Every budget must appropriately address the issue of fiscal deficit. Recently, government has undertaken very significant tax reforms for boosting investment. However, expected tax buoyancy will take time. We estimate a fiscal deficit of 3.8% in RE 2019-20 and 3.5% for BE 2020-2021. This estimation is consistent with the government's abiding commitment to macroeconomic stability, and it comprises of A, 3.3 for year 2019-20 and 3 for the 2020-2021 budget estimate, and B, Section 4(2) of the FRBM Act, which provides for a trigger mechanism for a deviation from the estimated fiscal deficit on account of structural reforms in the economy with unanticipated fiscal implications. Therefore, I have taken a deviation of 0.5% consistent with the Section 4(3) of the FRBM Act, both for RE 2019-20 and BE 2020-21. Accordingly, the return path is being laid before the Parliament as a part of the medium-term fiscal policy cum strategy statement. This fiscal path commits us to the path of fiscal consolidation without compromising the needs of investment out of public funds. Accordingly, net market borrowings for the year 2019-20 would be 4.99 lakh crore, and for the year 2020-21 it would be 5.36 lakh crores. A good part, this is very important, sir, a good part of the borrowings of the financial year 2020-21 would go towards capital expenditure of the government that has been scaled up by more than 21%. As I had previously mentioned, another about 22,000 crores have already been allocated for equity to fund certain specified infrastructure finance companies who would leverage it manifold and provide much needed long-term finance for infrastructure sector. That should spur the growth impulses in the economy.